Welcome to the Rocket Roof Show, where we equip fellow roofers to do more commercial business every first and third Thursday of the month. It's time to launch your business to the next level.
This is Project Command. Stand by our power transfer.
3, 2, 1, blast off!
Okay. Welcome to the debut edition of the Rocket Roof Show with Andy Neer. I'm CEO of Empire Contractors up here in Shelby, Michigan. And just to get started off, I wanted to kind of lay out the premise of the show. The idea of the show is really to equip and educate contractors that are in the commercial roofing industry, whether they're coming in from residential into commercial, or they've been in commercial for a while and are trying to learn how to get to the next step or the next level, or just want to network and really get some new avenues and new connections in the commercial industry. Or if you're an employee and you're looking at going up to the next level. So we're going to be bringing on guests every couple of weeks that are professionals in their sector to really talk about what I like to say, a lot of the things that contractors don't like to talk about, hiring good people and talking about insurance and talking about bonding and risk management and all those, I could list a whole myriad of things that the contractors do on a daily basis. And so we're really going to be talking nitty gritty stuff and hoping to equip and educate contractors on the commercial roofing industry and where it's going. So without further ado, I want to introduce our guest for today, and that's Louis Rodriguez. Louis Rodriguez is the owner of Third Coast Insurance Agency here in Michigan, and is an independent insurance agent that specializes in commercial insurance. Since 2004, he has served contractors in the building trades and helped his clients to avoid financial hardships through the design and implementation of customized insurance and risk management solutions. Louis holds multiple insurance designations, including Certified Authority on Workers' Compensation, and is about to finish the fifth part of 5-part series, making him a certified insurance counselor. Just want to make sure to remember, he is licensed in Michigan, but there's many other insurance companies that use a standard national insurance contract, but some have a custom form. So insurance is regulated by the state, and he is here in Michigan. So the opinions and things expressed on this show may not pertain to other states such as Florida and Texas. And so make sure that you consult with somebody that's in your area before after the show. So go ahead and introduce Louis to the show. How you doing, Louis?
I'm well. How's it going there, Andy?
Good. Yeah, I know you said Garrett there because for a long time dealing with our company, you dealt with Garrett here at our company. So Garrett's my son, and he's actually running the video this morning. So thank you to him. Just wanted to start off by some of the confusion that might be when people are talking about insurance. I know some people have been in the game for a couple of years. They know a little bit about what they're doing, but guys that are just getting started, or maybe in the first year of owning a company, they get lost in what are my requirements when I need. I think liability is pretty straightforward, so we're not really going to touch on that. But as far as work comp, what are some of the things that new guys get hung up on when they're saying, well, I got employees, but I don't know where the line is drawn where I need workers' compensation, and what questions should I be asking? Can you start off right there?
Yeah, I sure can. It seems like in the current market that we're in, the current labor market that we're in, more and more contractors are looking to subcontractors as solutions, to get the work done, versus traditionally employees and hiring full-time employees, keeping them on, keeping them busy through the busy season, maybe even all year, was the traditional way to do things. But in the current economy, finding people that, first of all, want to be employees, want to be hired, want to stay on for the long term, become fewer and further between. And during the busy season, or for various other reasons, A lot of contractors are turning to subcontractors as a great solution to either be able to get through the busy season or even just as a standard practice. Subcontractors can be a very useful tool in the success of your business, but they do open up some specific risk exposures to you and your business. And there's various tools that can be used in order to be able to cover those exposures, both insurance-wise and planning-wise, or what I think of as managing one's risk. If I could, I'd just like to talk in broad terms about two main aspects of these exposures. One of them is related to avoiding surprises as it relates to the premium audit on the insurance side. And then the second one is to helping to avoid surprises at claim time. And when I mean surprise, I don't mean a good surprise. I mean, unhappy surprises like, hey, that's not covered because you used a sub to do it. So just as a general overview, I would say that when it comes to general liability, workers' compensation, commercial auto liability, commercial umbrella liability, there's the coverage, and then what do they charge for the coverage or the premium? And the way that insurance carriers develop what they charge for the premium is based on various factors. But as a general basis, for the premium, it's the type of work that's being done. The second thing is the amount of payroll or the amount of money that's paid to subcontractors. The cost of the subcontractors account for the premium. And then the third factor when it comes to premium is the sales figures of the given contractor. So making sure that these aspects are well thought out when putting a policy in place can be very helpful in order to avoid surprises at premium audit time. In my experience when working with contractors, one of the things that I've noticed is that there's a distinction between what we think should be and what actually happens at audit time, and that's where the surprises come in. And sometimes those surprises can be avoided if the contractors are well informed and in touch with what exactly their insurance policy and agent is understanding about them. So as much of it as I find insurance exciting, like you might find roofing exciting, a lot of the times they don't come together in a way where we're talking and we're communicating and being open about how our business is developing and changing. And so that will be a crucial element in avoiding those kinds of surprises.
If I could take that and dive into that just a little bit, Louis, because I know a lot of guys, when they start hearing some of that jargon, they're like, well, I have guys that work for me all the time, but I can't afford to have them on payroll all the time. So we're going to have them listed as a subcontractor. And so they try to do that. And there's a lot of, red tape and fine lines between where a guy is, what side of the line he is on a payroll employee or a subcontractor. And a lot of guys don't get caught, but I have heard a few instances where guys get caught because the state comes in and says, well, the business owner, the contractor tells you where to go every morning, what time to show up every morning. And so you're an employee, or you're wearing their clothing with their name on it every day. So you're an employee, or they supply you with their tools. And so they got can you elaborate a little bit on like, how does that pertain? And maybe I'm asking you something that's above insurance, but you've got to split that line of what makes an employee and what makes a subcontractor. If you could speak on that for just a second.
Sure, I can. And you and I spoke earlier in preparation for our talk today that maybe at some point it might be informative and helpful to have both an insurance person and a tax person or a CPA on, because often the description of an employee versus a subcontractor can be a little bit different between what the IRS perceives as an employee or subcontractor and what the insurance company describes as an employer subcontractor. But for the purposes of insurance, the field is always changing. There's been some recent changes particular to work comp law in the state of Michigan. In the past, where a sole proprietorship, a company that's set up as a sole proprietorship, could always exclude themselves for the statutory need to have workers' compensation insurance. As well, corporations, S corps and C corps, can exclude their officers from the need to be covered by workers' compensation insurance. So in between those two types of entities are LLCs. And in the past, the state of Michigan, I can't speak to other states, but the state of Michigan would say that the members of an LLC could exclude themselves from work comp as well. That has changed recently. And it's not changed in a way that provides good surprises to the owners of companies. And what I mean by that is now the state of Michigan has to approve a company that does not want to have workers' compensation or does not want to have workers' compensation coverage on given members of the LLC. So that's very important to recognize. I'll tell you just a brief story on how that could play out in Michigan and other states that have laws like Michigan. There's an item that's available called a waiver for the need for workers' compensation insurance. That in the past, if it's filed with the given contractor that the sub is doing work for, when the sub completes their audit at the end of the policy period, then the amount that was paid to that LLC as a subcontractor was not included in any of the workers' comp basis for the premium. And so that was fine. And then that law changed, and now all of a sudden, when $0 were accounted for as part of the premium, now $100,000 or some amount that was paid to that LLC now must be included in the calculation of the premium, which could be a very large surprise for the contractor that hired the sub. In dealing with that, at least related to the state of Michigan, they can grant, they don't always grant, but they can grant a waiver to the given LLC or members of the LLC to be excluded from the workers' comp requirement. But it's not a guarantee. The state has to give its blessing for it. I don't know if that's the direction that you were going, and that was a really big explanation that left some voids in, well, what do you mean? What is a workers' comp audit? I don't know if we need to talk about that at all.
No, I don't. You can do a brief explanation of workers' comp audit, and then I have a couple other questions that are pertaining to people pretty much starting their company. So yeah, go ahead and explain that, what to expect from an audit, how to prepare for an audit, and really what an audit, the reason for it.
So when it comes to certain insurance policies, the premium that the insurance carrier charges has some sort of a basis for why they charge the premium. A good, easy example is on an auto policy, you know that the driver and the kind of auto are the basis for how the company develops the premium. But on the general liability side and on the workers' compensation side, the insurance company wants to know how much payroll occurs with a given type of work, and then a premium is an estimated premium in advance of the policy year is developed. And then they also want to know the given sales that come in for different types of work performed. The example I used earlier was carpentry and roofing. There's different rates. So if a company has $100,000 in carpentry and $500,000 in roofing, they'll receive a premium commensurate with that. At the end of the policy period, there's something that they call the audit that occurs, whereby, in the example I just cited there, if there was actually $75,000 in carpentry and $600,000 in roofing that occurred, then the premium would change commensurate with that. So then they would reconcile for the past policy period. And that could, in the case that I just cited there would be more premium due, and maybe a lot more premium due, which can be undesirable or an unhappy surprise that can come. So ways to avoid that. I'm sorry, were you going to?
I was gonna say, yeah. Back in the day, a few years ago, we tried to get creative and say, okay, maybe the guys are on the roof and they're repairing some siding, or something like that, and we are going to call it not roofing, so that we can get away from that roofing, because roofing was like, I don't know, 42, 44 cents on the dollar, and siding was listed kind of under construction, so that was like 18 or 20. So we tried to get creative and say, anytime a guy's working on a little bit of siding or maybe reframing some trusses, we were going to take that lower rate and categorize it. And then I think a few years ago, the insurance company started tightening up on that and saying, no, on a roofing project, if they're on the roof, they are 100% in the roofing category, the whole project. And so just in case any guys start getting creative in their mind about, hey, if we're on the roof, early on, I tried to get creative and say when they're tearing off, it was demolition. And it's like, no. If they're tearing off shingles, it's roofing. And so, just make sure that you're clarifying with your insurance company, when they're roofing, when they're not roofing. So, for example, if they're in the shop doing training, you can call that training. It's not roofing. Or if they're driving to the job site, that's transportation or driving. But if they're on the roof or if they're at the job site, I even had a guy that was, say he was supervising the job, but he didn't get on the roof. And, they tell me, no, he's on the roofing job. He's not just popping in to do an inspection. He's on the roof. He's in the roofing category, even if he's not physically on the roof. And so just make sure you get, when you're talking to your insurance company, at least I would say, make sure you ask those questions.
I agree. To take it one step further, a lot of our conversation is revolving around employees, and I started out here to talk about subs. Andy, you're absolutely right. Tracking employees like that is crucial. Tracking subcontractors can be important too. So in preparation to avoid unwanted surprises, as you hire subcontractors, developing a procedure by which you go through before they get on the job site, whether they're starting for the first time or if you set up an annual review of their insurance documents. I'm sure that many companies have in place already that if you hire a subcontractor, you have to have insurance. And you have to have different kinds of insurance that are applicable to the kind of work that you're doing. So setting up a system by which you have the ability to make sure that insurance is correct and adequate in the event that you do hire people as subs becomes more and more crucial. So getting back to the original conversation, how can we avoid surprises in the cost as it relates to the premium audit and subcontractors? The number one way that we can do that is to make sure that they have all the adequate insurance so that they don't get charged on your insurance. That will happen when they get brought on the job site initially, and then subsequently every year when their own policy renews. So that would be my advice to help avoid those surprises.
Yeah, and as a new contractor, I think it's great for guys to get that mindset to remember it's not really, well, it's my fault or their fault, who fault it is. When you're talking about policy, you've really got to realize where the liability falls on. It's all in the paperwork, and making sure that you're asking the right questions with your agent to find out where your exposure is. Exposure is really the key word, right? Because when you were talking to me years back, it always comes back to exposure. The insurance company wants to know how much exposure are you at and where that liability falls.
That's right. And, this is kind of a nice segue to avoiding surprises at claim time. There can be some awful surprises that occur at the time of claim. So we're all buying insurance. We're all buying what we believe is the adequate and correct insurance to buy. Now, God forbid, someone falls off the roof or some sort of property damage to our client's building or home occurs. Well, now we're going to test the insurance. And now it's time to understand that some pre-preparation can help us to avoid unwanted surprises at that time. Now, when it comes to the purchase of insurance, many folks, they're looking to, what's this going to cost me, especially startup roofing companies, startup contractors. They're very cost sensitive. and some looking at the pricing can be particularly important. But just like when you go in to buy a new tool, there's a reason that some air compressors cost one and some air compressors cost twice that. One hammer costs, $25, another hammer costs $62, and there's a reason for that. In part of our preparation for today, I thought I'd pull up really some fun thing. Well, fun, I mean that in a sarcastic way, but insurance can often be all about what are the exclusions and limitations. What are the endorsements that occur on it, and why is this insurance policy so long? Well, there's a good reason for that, because we want to look at what the exclusions are in the policy, and we want to look at the endorsements that are covered. There's a prime example of this. There's an endorsement or an exclusion that's included on many general liability policies for contractors, and the name of the exclusion is CG 2294. What does that mean? You open up your insurance policy and you see all these numbers. Well, this CG 2294 means an exclusion of damage to your work performed by subcontractors. You can see why having an endorsement that excludes any damage that your subcontractors performs could be problematic, and you would want to know in advance if that's something that's included in your policy. So one way to avoid that kind of a surprise is to have a trusted advisor, someone that can walk you through any parts of the policy that you're going to want to know about in advance. So having an exclusion for work performed by your subs isn't necessarily a bad thing, as long as they have the proper insurance that would pay for the damage that they would cause. And so being clear on what their policy needs to cover, if you have such an exclusion in your policy, can become crucial. We have, a lot of the times in the insurance business, we recommend to our clients that, well, make sure that you get a proof of insurance from them. Make sure that you're a certificate holder or additional insured, or you have a waiver of subrogation, or all this insurance-y language, and what does it really mean? So one of the ways that you can avoid the surprises is when your clients, when your customers ask you for a proof of insurance, understanding what they're really asking for, which can be tough because you want to give them what they want because you want the work. When you're that close that you're talking insurance, a lot of the times you're close to closing the deal. At least that's my perception. Andy, has that been your experience that when you're asking for insurance, you're close on the deal?
Yeah, exactly. That means that they've already kind of making a decision to move the ball forward at that point in time.
Mm-hmm.
Yep.
So understanding when they ask you for proof of insurance, what exactly are they asking for? Having someone on your staff, whether that's you or someone that gets appointed to it, that can really understand what there's four main categories of certificate holders that folks want to ask for, and understanding how that plays into avoiding surprises at claim time, should there be a claim, so that are there exclusions that they're asking for? Does your policy include exclusions? Does your subcontractors policies, do they exclude specific things that could be important to you? That's very, very important. Hand in hand with that, in avoiding surprises at claim time, I know a lot of times we all enter into these agreements when we bid a job, when we accept a job, that might include hold harmless clauses, both on the side of whether you're doing work for a larger contractor or a homeowner or a large corporation that owns a building. We'll often get into hold harmless clauses or hold harmless agreements, and understanding what those are really saying. It's important to understand those. Excuse me. Excuse me. Thank you. So I think that understanding those hold harmless agreements plays into what the exclusions and endorsements are that are on your policy.
Okay.
So anyway.
So we're coming up here at the end. So this let me ask you a couple of closing questions. Somebody that's just starting, let's go with if somebody is moving from residential to commercial. They're kind of familiar. They've been doing insurance for a while. What questions should they be asking going into the commercial sector? I'm sure you get this quite often since you deal with primarily commercial. I think a lot of people are just like, well, insurance is insurance. I mean, what's the matter if I'm doing one or the other? But is there a few things that they should be aware of when they're making the transition to commercial projects?
Yeah, I think that that's a very good point. There can be some premium differences, some rate differences between commercial and residential roofing. And so I would be in contact with your agent to make sure that they understand how your business is changing, if it's changing. Excuse me again. Yeah, so I would make sure that you're in contact with your agent as your business changes, whether it's changing from residential to commercial. That can affect both the workers' compensation rate, it can affect the general liability, and it can affect other parts of your policy too. So one of the best things that you can do is, as the nature of your work changes, you keep them informed.
Yeah, because I think some people's tendency would be, hey, I'm doing some jobs, all of a sudden maybe you do a project that's 4 times bigger than anything you've ever done, and you don't really think about, hey, I better let my insurance know. But if something were to happen on that job and then you were to be audited, they would go back and look and say, now wait here, something's out of the norm, and it may or may not be covered because you did not is that correct? You did not keep them in pace of what kind of work you were doing?
That is a potential thing that could happen. My larger concern would be that the premium implications could be something that has a very negative impact at a time that you might not want it. Specifically meaning that you might have a large bill come due that you weren't anticipating. Generally, if you stay within the roofing trades, you're going to be safe for what your policy covers related to a change from residential to commercial. But for those that are wanting to maybe change from more of a carpentry occupation and adding more roofing, there could be a huge coverage gap then. If your insurance company thinks that you're only doing roofing incidental to your work when you had previously been a siding or a window contractor, there could be a significant exclusion of coverage for claims as it relates to roofing and roofs. Okay.
Well, I want to thank you for your time here on the show today, Louis. I think you give us a ton of great information. A few things that I even learned here. I always learn things when I talk to guys in your industry that things are ever changing, laws are ever changing, and so just want to thank you for that. Is there any? Can you leave the listeners with maybe some of your contact information, if you're willing to share that? Remember, he's only licensed in Michigan here, but if you want to reach out to him, maybe you can leave some of your contact info.
Yeah, absolutely. Folks can get in touch with us through our website. It's thirdcoastins.com. That's www.thirdcoastins.com.
Awesome. Well, thank you for taking a few moments to be with us today. I know we all have busy schedules and we had to make this thing happen. So appreciate that, and I hope you have a Merry Christmas. I know the holidays are upon us. But so once again, this is the Rocket Roof Show. This is the first episode, and I'd love to see your comments down below of questions you may have, ongoing conversation. Comments or questions. Remember, I'm not an insurance professional, so I probably won't be answering those. But we can at least have some dialogue, communication here, and would love to see it. If you are not subscribed to this channel, or whatever platform this is on, I would love to see you subscribe, and you can continue to get notifications for this. So thank you once again, Louis. Thank you again, Jonathan, for taking care of the technical part of this. I know you're in the background there. So see you on the next one.
You've been listening to the Rocket Roof Show podcast. Be sure to subscribe through your favorite podcasting platforms such as iTunes or Google Play to get the latest episodes as they are launched. For more, please follow us on social media or visit our website at rocketroofshow.com. We look forward to joining you here again soon at the next launch.